Welcome to another S&P 500 analysis. Today is December 22nd, 2022. It's late at night around 11 p.m. on the West Coast, and tomorrow is the last trading day before Christmas. So will Santa bring cheer to the market? So far this week, it has been a roller coaster for the market. On Monday, the S&P 500 was down more than 1.5% intraday and ended the day with a loss of 35 points or 0.9%. Then on Tuesday, the S&P 500 went down 0.6% before it recovered and finished the day with a small gain of 0.1% or almost 4 points. Then on a more positive consumer confidence report on Wednesday, that lifted the market and the S&P 500 rallied to a gain of 1.5% or 57 points. Then a better than expected GDP report on Thursday, and that caused the S&P 500 to be down almost 3% or 114 points intraday before it recovered some of the losses in the afternoon and closed with a loss of 56 points or 1.45%. So what will be the day before Christmas Eve brings? Stay tuned. To get some idea on what the market might do, let's take a look at the market generator information, or MGI, for the S&P 500 ETF, the SPY. The first MGI is the weekly expected move, upper and lower range. These price zones are based on the option prices that the market participants are betting on where the SPY will close at the end of the Friday trading session. And based on the various option prices, the upper range is determined to be between 391.75 and 393.50, and the lower range is between 372.5 and 375. So as you can see on the chart, the lower range was tagged and then it got rejected and bounced right off this lower range. And the next MGI we'll look at is this composite volume profile. This composite volume profile is between the middle of August to last Friday's close. Now, for those that are unfamiliar with volume profile is basically plotting price versus volume instead of volume versus time on a standard volume bar chart. So each one of these horizontal bar represent the amount of volume traded at that particular price level. So let's go and take a look at what this composite volume profile is telling us. Here we see that there is this high volume zone here, okay, and that is what we call a little bit of a balance area. And here's another high volume zone. And in between, there is a little bit of a low volume area. And based on the auction process, price will auction from one extreme to another in the balance zone. So for example, the price will go auction up, and then when it gets to the upper edge of this balance area, then it will auction back down. And then when it gets down to the low, then it will just continue to balance there, because that's what we call a balance area. And this area is considered to be fair value for the buyer and the seller. And that's why there are a lot of transactions taking place at these price level. Now, when the buyer or the seller, one end of the market is basically get exhausted, then it will break out of this balance area and it will do a price discovery to look for the next balance area. And that's where we see these low volume area, and that's where it will try to move to find the next balance area where there's a willing buyer and seller to conduct business. So let's go and analyze this area here, and let me put back the zone here on these high volume zone and low volume zone. So right now, basically, I got this low volume zone identified here with this highlighted area, and also there's another low volume area and a low volume area. And this low volume area also in confluence with this lower range of the weekly expected move. So as you can see on Monday and Tuesday, the price is pretty much inside of this low volume zone. Then on Wednesday, when we got that positive consumer confidence report, we saw the price broke out above this 382 area and start migrating, auctioning up to this 388 area. So you can see that it's basically auction up into this upper edge, near this upper edge, and then get rejected back down, for the auction. Then the following day, we saw price gap down because of a better than expected GDP report, and that kind of spooked the market because the market now afraid that the Fed will not loosening or reverse the rate hike anytime soon because the economy is still strong. So that's where we got the sell-off, and you see that it auctioned to this low volume zone, came down to the lower edge of this balance area and got rejected and bounced back up. So now it's coming back up to this low volume zone here and near this 380, 81, 82 area. So for the coming day, what we be looking for is, will the price be able to continue to auction back up? Essentially buyers trying to find seller, okay, to by raising the price to find seller, okay, and auction up to this 388 area, okay, or will there be more seller still continue to try to find buyers, so they will lower the price to seek buyers to sell to, and that's where we're going to see price come back down to this 375 area, this lower range, or this low volume zone here. Now, the other piece of information that we want to look at, the market generated information, or MGI, is the option open interest that we will use to project to see where the participant are targeting the price level for tomorrow. Here I have the open interest chart posted on top of the candlestick chart for the SPY. And this area here is the lower range of the expected move. And this area here is the upper range of the expected move. So you can see the price scale down here. And on this chart, the red line is represent the open interest for the put, and the green is the open interest for the call. So as you can see, there are some put wall and call wall. Those wall, what we call is a high amount of open interest at a certain price level, and those tend to present itself as potential resistance and support level, because when price get to those level, that the strike of the open interest of these options, there tends to be what we call gamma squeeze. Those are the area that there will be a lot of back and forth price action at those levels to try to scare, to try to square off the position based, on the market maker, the hedger, right? So those are what we call the wall for the call. For example, here at this 388. We have a high level of open interest here. You see the spike up here. And also there's another high level of open interest of call at 390. Now notice where these levels are in terms of the candlestick on the price chart here. You can see that 388, remember we are talking about this upper edge of this or this zone here, this lower edge of this low volume zone, and that is near the 388 level, and also the upper edge of this low volume zone is the 390. So let me go and take out temporarily remove this chart here, and you can see from this chart if the price is going to come back up, and here is this first call wall at 388. Right, so we could get a rejection. See, we saw a little bit of a rejection earlier on Wednesday, but now on tomorrow expiration, there's a lot of open interest up here that is going to get hit, and when it get up to this area, there's going to be some back and forth between the hedger and this the market maker. So we'll see what happened here. If it could get squeezed through, then the next level of battle will be the 390 area. Okay, so we're going to see, will it enter into these two levels and see will it get rejected, back down. Okay, now let's go back and take a look at the other end, which is the put. So let's go and take a look at those and putting back this chart here. You can see here we got the puts, and the wall for the put is essentially we have this high level here at 380. That's this level here, and then we also have another level at 375. So where is that 375? Well, it's right here at this lower edge of the the lower range of the weekly expected move. And where is that 380? Well, the 380 is right inside of this zone here, right near here. And I'm going to show you that it is actually represented by another market generated information that pointing to this 380. We could see that the possible area for max pain be here, right, at 380, because that's where it will take out. If it expires at 380, all these put will go worthless. And so are all these up here. You see how these high level puts, open interest here, these will go to worthless. Okay. And also you see all these call will go worthless. So that would be max pain there. So the other possible pin location could be here, the 385, because that's where also the put and the call is pretty much the same on the open interest. So if they stop here, then all these puts and calls will get wiped out here. But we do have quite a number of these calls that will be in the money, and also these puts will be in the money. But that's okay, right? But the max pain will most likely be 380, and yeah, anywhere between 380 and this 385 is fair play tomorrow for potential pin. So watch the price bounce around between this area here. Now I just turned on the weekly volume profile. This is a weekly volume profile here, and notice this is the POC, or the point of control. Now for those that are unfamiliar with the volume profile, the point of control is the price level that has the highest traded volume for that time period. So for example, on this one here, notice what is the price level on that, okay? And it is sitting near 379.50. Now, let me put back the option open interest chart here. Remember, we're talking about this 380 level here as a potential pin, okay? And that is pretty much close to this level here, this 379.50, near this 380. So that is a probability, because here, inside this 379.50, that would be down here somewhere, okay, and 380.50, or this 381, and this is 379. So this 379.50 is somewhere in between this point and this point here, okay. So that is, that's 380 could be in play for the pin tomorrow. So that's why, these these information here, there's nothing magic about it. It's all based on market participant, where they are putting their money, where their mouth is. Okay, so basically it's betting where the price will be for tomorrow. Okay, so I hope this will help. And if you do find this to be useful, be sure to comment below and let me know. And be sure to smash that thumbs up to help me promote this video. Thank you for watching, and stay safe.